Hey everyone, my name's Bob Jablonsky. I'm an EA, an enrolled agent, and I'm also a certified tax resolution specialist. At my firm, Bob Jablonsky and Associates, we help taxpayers who have tax problems, who have IRS problems and other tax problems. Today, I'm going to talk about a program that the IRS had as a pilot program, but earlier this year, they made into a permanent program that's available to taxpayers and why it might be helpful to some taxpayers. So before we get into discussing where we're at today and what changed, let's talk a little bit about some of the options that were out there pre-COVID. Well, one option that was out there and still out there today is what's called a streamlined installment agreement. With a streamlined installment agreement, if a taxpayer has an assessed tax of $50,000 or less, they can get into this plan as long as they could pay that tax that they owe over 72 months. And so, what were the advantages? The taxpayer didn't have to provide a collection information statement, which is basically their financials. And that means they didn't have to give information about their assets, what they own, as well as they didn't have to give information about their monthly cash flow, their inflows and outflows. So it made it really simple. You get into the streamlined payment plan. You don't have a federal tax lien filed. Levies are not filed under payment plan. So life was very easy there. So a lot more difficult if the taxpayer owed over $50,000 because in this case, they had to get into a non-streamlined installment agreement. What does that mean? Well, the big thing is that now a taxpayer is going to have to provide a collection information statement. They have to provide their financials. They have to tell the IRS what all their assets are, where their bank accounts are, what the account numbers are. Where do they own real estate? Do they have stocks and bonds? Do they have retirement plans? Information about all of these assets. In addition, they're going to give information about all of their inflows and outflows of cash, showing their ability to pay the IRS. So the IRS is going to look at that collection information statement, and they're going to attempt to get the taxpayer into a payment plan. The IRS, the taxpayer often needs to pay their expenses as they are. They want to push their payment timeline out as far as they can reasonably. The IRS, on the other hand, as any creditor does, wants to be paid as quickly as possible. So they're going to be looking at some things on that collection information statement. One, how much can you really afford to pay the IRS? And now you may think that's one number based on your actual expenses, but the IRS may think it's a different number based on what they consider to be their allowable expenses. So their number of what you can pay might be much higher than what your number is. In addition, the IRS now knows what all your assets are. They may be asking you to liquidate those assets if possible. And if it comes down the line where they levy you, they have information on all of these assets available to them. So those are all reasons why that collection information statement is not good for the taxpayer to provide it. The good thing is you get into a payment plan and the IRS is not going to levy you. So that's a real big positive about it. But as I mentioned, they're going to be looking for more than the taxpayer may want to pay. In my situation and helping taxpayers, it may put me in a position where the negotiation is much tougher than with that streamlined agreement. So what are we talking about today? During COVID, the IRS instituted a pilot program, and that pilot program was for taxpayers who owed up to $250,000 of assessed tax. So now, remember, under 50,000, you can get into the streamlined installment agreement, which is great. That's what you want. But now, if you fall into that $50,000 to $250,000, there's this variation of a non-streamlined installment agreement. What's the difference between a typical non-streamlined installment agreement? Well, in this case, the IRS said, as long as it's within those tax debt limits, as long as it's with what's called ACS, automated collection services, or which is when you're calling the 800 number versus with an individualized revenue officer, you can get this payment plan set up without providing these financials, this collection information state. You have to be able to pay, not necessarily within 72 months, but within the collection expiration date. So the IRS has 10 years to collect the tax debt. How many months or less, you have to be able to pay your debt in full within that period of time. The advantages are obvious. One, the IRS is not going to be looking at all of your assets. The second thing is that as long as you can make those payments, the IRS doesn't worry about how much you make or how high your expenses are. You just need to be able to make those payments and get those done. So there's some obvious advantages. What's happened now? Well, earlier this year, the IRS has made this permanent. What does it mean to you as a taxpayer if you owe the IRS? Well, if you're in that $50 to $250,000 and you have not yet been assigned to a revenue officer, now may be the time for you to act using this program. We could get you, if we could get you into this, it could be a lot more flexible to you. If you wait until you get assigned to a revenue officer, it might be a whole lot harder. The revenue officer does not work with it. These programs do not work with it with a revenue officer. And in addition, a revenue officer has the responsibility of closing your case. So they're going to be more aggressive to get a resolution to your case than while today it's with ACS. So if you're in that situation, now may be the time to go. If you need help with this, my name is Bob Jablonsky. My phone number is 954-715-7285. And you can get on my calendar at https://jablonsky&associates.com/contact. And that is in the description below. I hope you liked this video. If you did, please give us a like so others will be watching it. If you need help, as I mentioned, I just gave you my information. If you are interested in tax resolution, you have other issues that you need to deal with, please subscribe so you'll get to look at all of my videos as well as see all the videos that are coming forward. Finally, if you have any quick questions, please leave them in the comments below, and I will do my best to get back to you. I hope you all have a great day. Thank you for listening.